Just before we jump in, a quick reminder that this video is for educational purposes only and is not financial advice. You should always do your own research or consult a licensed financial professional. Welcome to The Explainer, where we connect the dots on the biggest stories shaping our world. Now, on the surface, you've got these three huge but seemingly separate events. First up, in the entertainment world, a colossal acquisition is about to completely rearrange Hollywood. Meanwhile, on the other side of the planet, there's this quiet battle being fought over soybeans, of all things, but it's totally redrawing the map of global alliances. And then, back here in the financial world, all eyes are glued to the Federal Reserve. They're about to make a decision that could send ripples through the entire economy. A media deal, a commodity shock, a Fed meeting? They feel worlds apart, right? But what if they're not? What if they're all tangled up in the same hidden story? Well, today, we're going to connect those dots. So, our story doesn't start with tech or Wall Street. Nope. It starts on a farm with a simple commodity and a connection that honestly most of the headlines just completely miss. So, here's what happened. China, a massive buyer of U.S. soybeans, suddenly slammed the brakes on its demand. We're talking about a $13 billion trade hit. They pivoted and started buying more from South America, which, really hurt American farmers. But then, the U.S. made a countermove that nobody saw coming. They went to Argentina and offered them a $20 billion currency swap loan. Now, let's be clear. This wasn't some kind gesture to help out a struggling economy. This was pure strategy. It was a power play designed to block China's growing influence in the region and to get access to something way, way more valuable than soybeans. And that brings us to the Lithium Triangle. Argentina is a huge part of this region, which holds more than half of the entire world's known lithium reserves. So why is this one little corner of the world suddenly so important? Well, because lithium is basically the new oil. It's the key ingredient in the batteries that power, everything. Electric cars, advanced robots, drones, you name it. But the big one, the real game changer, is AI. You need massive data centers and energy storage to fuel the AI revolution. And the numbers here are just staggering. AI's thirst for electricity is exploding. Look at that chart. By 2033, AI servers could be using as much power as several countries combined. You can't run that AI without a mind-boggling amount of electricity, and you can't store that electricity efficiently without lithium. So that whole global chess match that looked like it was about soybeans, it was never really about soybeans. It's about securing the raw materials you need to win the next industrial revolution. This is resource warfare, plain and simple. Okay, so you've got this global power struggle going on. Now let's see how that creates these massive shockwaves that force entire industries to completely transform. Let's start with media. This slide right here says it all. Netflix's annual revenue now blows past the entire global movie box office. Think about that. They're not just a competitor to Hollywood anymore. For all intents and purposes, they are Hollywood. And their recent move to buy Warner Bros., that's not just buying a film library. It's a play for cultural consolidation. They're buying whole universes: DC, Harry Potter, Lord of the Rings, HBO, the whole shebang. Now, it's a huge, bold move, and it's got some serious challenges, a mountain of debt, and a regulatory review that could take a year, maybe even 18 months. And you see the same kind of radical transformation over in the tech world. Meta absolutely shocked everyone when they cut their metaverse spending by 30%. They pivoted hard and announced they were going all in on making money from AI. And investors? They loved it. It was like the company finally cut loose this huge anchor that had been holding it down. So, with all these massive shifts happening, the markets are, chaotic. So how can anyone make sense of the day-to-day signals? Well, a big part of it is learning to read the patterns of the central banks. You can see this play out almost every time there's a big Fed meeting. It follows this surprisingly predictable cycle. There's often a little rally the day before in anticipation, the actual announcement, usually already priced in. But the real action, the real volatility kicks in during the press conference. That's when the market hangs on every single word, and the longer that Q&A goes, the more the market tends to drop. And this really highlights the danger of chasing headlines. Look at OpenAI. A few months ago, it was the savior of the market, right? But now, as people start to grasp the sheer scale of resources it needs to grow, that narrative is starting to shift. Now you hear whispers about it being a potential burden. It just goes to show you, today's hero can easily become tomorrow's problem. Now, beyond all the big picture stories, some analysts try to find clues right there in the charts themselves, looking for common patterns that pop up again and again in all the noise. For instance, a classic one is the bull flag. The idea is you get a sharp price run-up, that's the flagpole, followed by a short little dip where things consolidate, that's the flag, and it often suggests the price might be getting ready for its next leg up. Of course, it's just one piece of a much, much bigger puzzle. So, as we've seen, the connections are just everywhere. A fight over soybeans is tied directly to the future of AI. A streaming company's latest acquisition is really about the global consolidation of culture. And a central bank decision sends out ripples that touch every single corner of the market. It all shows that everything is part of this one giant, interconnected story. And it really makes you wonder, doesn't it? In a world this connected, where will the next ripple effect even begin? Thanks for watching this video overview on 15-Minute Investor.